Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay, home ownership consultant through the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, the Canadian Real Estate Association has released their monthly national report, Terranet releasing their price trends last Friday, banks releasing their reports and mortgage data. It's a lot to go through, but let's jump right in.
Let's jump right in, and for your listeners, I want to apologize today, Jim. The amount of information is out there. I'm sitting here with my computer screen today in preparation for whatever questions you're going to throw at me, and I've got about a dozen windows open on the computer screen. In other words, a dozen housing-related news articles, reports, stories that have all been released in the last 7 days.
Well, just start at the top and chip away.
Yeah, well, chipping away, this is the problem. Every single one of these reports, Jim, is filled with nonsense. And I'll start with the Canadian Real Estate Association today. Listeners to the show know that for the last 4 months, I've been on the show telling everybody that the Canadian Real Estate Association suggesting that sales were increasing over the last 4 months by the use of a seasonally adjusted number was nonsense. We've said on this show over and over and over again now for 4 months, you can never use seasonally adjusted numbers because in the end, the real market catches up with a seasonal adjustment. You could not make a home buying decision relying upon a seasonally adjusted number. And what that means, Jim, is that over the last 4 months, Canadians, approximately around 85,000 of them, 85,000 families have gone out into the housing market, purchased a home, believing that the housing market was getting busier because the Canadian Real Estate Association said it was, only to wake up today in September, middle of October, to hear the Canadian Real Estate Association admit, sales activity has returned to a lower level again. It is just crazy, Jim. The actual sales by the members of the Canadian Real Estate Association for the month of September, not discussing how the month of this September is different than the month of last December in what is being reported. It was down 9%. Over 9% the housing market had dropped. Versus the last 4 months, they told everybody the market was getting busier. They're still claiming, relying upon the MLS HPI home price, saying that it is up 2.3% year over year, when in fact, the national average selling price is down about $15,000 already. It is not up year over year. It is another false number created by organized real estate to sell homes. It isn't designed for your listeners to use to go out and make the single biggest financial investment of their lives. Then we go on to next. There's an article in Bloomberg today about condo flipping. And the authors of the article are saying that rising home prices, none of the house price increase in Vancouver or Toronto was a result of flipping. Now, they go on to say that they used land registry office repeat sales to find out who had purchased a property and then sold it again a year later. Well, what the authors of this story have in the prestigious publication Bloomberg News didn't say was, that's not how Canadians flip houses. Canadians flip houses by what we call a paper flip, which many of your listeners will remember. Back in 2016, we issued a report about the money laundering Ponzi scheme in currency exchange Ponzi scheme in Vancouver, which is where we cited paper flips. Paper flips are how speculators in Canada have flipped properties since the 1970s. The reason they do that is manyfold, but mainly because by trading the paper, the contract, and never closing or having to close on the property and resell it, but just doing it with the paperwork, they save themselves on average between 11 and 13%. So it would only be a foolish speculator who would close on it, get that number reported on the land titles office, and then flip the property. That's why when these authors did this report, it showed about 2 to 3% of the housing stock was flipped. No, they're not counting the flips. Yet, immediately the British Columbia Real Estate Association seized upon this today, and they have already put out a press release using this news report from these two reporters to justify their own incompetence and their own complicity in the house price gains that were reported to consumers. Your listeners can understand this. We have talked on the show in the past about real estate agents not completing FINTRAC forms, about real estate agents helping with tax evasion. A paper flip is specifically designed to do those two things. Revenue Canada practically never sees a paper flip. They never see any of the paperwork because the speculator doesn't report it. The real estate agents who participate in it, those houses never close. They're just flipped on the MLS system. So paper is just exchanged. Before the first buyer moves into the home, that first buyer sells the property to a second buyer, and sometimes a third buyer. And if it was a foreign buyer, sometimes a fourth and fifth buyer. So a single property can trade hands 4 or 5 times, but it only shows up once in the land transfer office. Then we have legendary Knight Franks, which is a real estate consulting firm over in Britain, a worldwide platform used by the Canadian Mortgage and Housing Corporation, cited by them in their reports. And today they have a report out that says that Toronto has dropped to the 137th strongest housing market in Canada. They have actually placed Calgary, Edmonton, Halifax, and Montreal all above Toronto. Vancouver, they've left at 10. When in fact, as your listeners to the show know, the housing prices in Vancouver have been correcting now for over 2 years. The bump caused by the $30,000 first-time buyer credit for interest-free mortgage is now gone, and even the condominium prices are correcting. This is more nonsense that the public gets in the paper. Finally, there's the Bank of Canada. This is just a roll call of incompetence, Jim. And what I mean to say is, when I'm speaking about these things on your show, and I'm sitting here, I have literally report after report after report after report from these other bodies, these other associations, these other corporations, these other consulting firms, that I can sit here and I can debunk with someone with a grade 6 education and a calculator. That this is how absurd it is. And the Bank of Canada today, they come out and they tell everybody that demand for high ratio mortgages did not increase in the third quarter of 2018. Our answer would have been that's not true. In the third quarter of most calendar years, your class of buyers who are buying in the third quarter are more heavily weighted towards trade-up buyers. Trade-up buyers do not get CMHC or Genworth insurance. They do not get mortgage default insurance because they won't pay for it a second time. They paid for it the first time they got their house, but they won't pay for it for a second time. Also during those periods, you are going to see local real estate boards, the Canadian Real Estate Association, all the banks claiming housing prices went up because the sales mix is shifted away from first-time buyers who use high-ratio mortgages, Bank of Canada. And when your sales mix shifts to the trade-up buyers, you get higher average selling price. Any grade 6 student with a calculator seeing these items on a sheet of paper could figure this out. But the Bank of Canada can't. CMHC can't. So what I'm really trying to say today is this, Jim. Of all 12 or so windows that I have open today, Terranet Bank, House Price Index, Scotiabank, Royal Bank, Bank of Canada, Canadian Real Estate Association, BC Real Estate Association, the Toronto Real Estate Board, the Vancouver Real Estate Board, every single one of their reports, every single news article written relying upon them are all false. They are incorrect. They are wrong. The reason why your listeners have been told that you cannot time a housing market is because of this nonsense. We know prior to any housing market dropping below a 3% annual rate of return when that is going to happen. We have a minimum, an absolute bare bones minimum, 3-month window prior to that 3% house price decline or house price gain being recorded. What I would like your listeners to have a simple, some understanding of what I'm talking about. From 1980 until 2017, if you followed 2 simple rules of investing in real estate, you would never have made a mistake. If you had purchased a portfolio of real estate in 1980 in one province, and you simply followed 2 rules, you would have turned $100,000 into $3.8 million. At the same time, the Toronto Stock Exchange went from 2,000 to 13,000. Your investment went from 100,000 to 3.8 million. Do the math. The 2 rules are this. A real estate investment should be looked at this way. When you know the average selling price in your community is going to drop below 3% a year, in other words, the declines are dropping to a point where you're not going to make over 3% in a year, you sell. The moment you see price appreciation increase above 3% a year, you buy. You always have 3 to 4 months advance notice of when those 2 points in time are going to take place. This works in every single housing market in Canada from 1980 until today. It works in every single housing market in the United States of America. The only difference with America is I would drop my threshold to 1.5% because their house price gains work a little bit differently down there. But in Canada, it's 3%. If you stick to those 2 rules and you have someone telling you when those 3 percentage points are going to be hit, someone gives you 3 months notice, 4 months notice, that 3% is going to be hit, you can list your home and sell it. You can liquidate that investment. And if you had did this simple process from January of 1980 until December of 2017, you would have turned $100,000 of cash into $3.8 million with zero risk. You would never have had a single month where you lost money. In other words, your investment total never, ever went negative one single month over those entire 37 years. Don't listen to what you're hearing in the paper or those 12 reports that I'm looking at on my computer monitor right now, because they're all wrong. They are all debunked. They are all false. A child with a grade 6 education, with a calculator, can figure this out. You need to understand what you're looking at. You need to know what you're reading. And it does not appear in any of those 12 reports.
We'll have more with Ross Kay right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back. We're speaking with Ross Kay. Ross, one of the headlines you sent me before the show was mystery home sales disappear from Canada in September. Is that because they've given up trying to track down the 40% of home sales they couldn't discover who financed them?
No, that was in relation to the headline from the Canadian Real Estate Association over the last 4 months, where they told everyone, and it was reported in every major Canadian newspaper, that home sales were increasing. When I came on this show, your show, and told everyone that that was not true, homes sales were decreasing. It is now October the 15th, and what I told the listeners on this show has been proven to be 100% correct. And Korea's announcement today that September home sales had declined 9% are the proof that you need. By the time the end of the year rolls around, Jim, and on January the 15th, 2019, when the 2018 housing starts, housing information from the Canadian Real Estate Association are released. That is the day when they hide from their past. They have followed the same pattern for over 30 years. They give you nonsense all year long. On January the 15th of the following year, they give you a synopsis of the year, and then they never talk about it again. It's gone. They immediately start misrepresenting housing stats once again. They misrepresent them simply because they want to get the highest price possible in the shortest amount of time for everyone who has a listing on Realtor.ca, so they can put commissions in their pocket. No other reason. That's what I was saying there, Jim.
Okay. Ross, a listener sent us an email asking why you don't appear more often in the media.
Why don't I appear in the media? This show, the platform that you guys have here, that you first provided me an opportunity to speak to the public on. This is not possible in the news. So if someone Googles Ross K CBC, Ross K CTV, Ross K BNN, Ross K Global, Ross K CBC Toronto, CBC Calgary, you will find that in the past I have taken the odd opportunity to speak about the housing markets in those media outlets. But your listeners should understand what I'm speaking is that I have to go on there and debunk pretty much everything that you read. When they're talking about average selling price increasing, Ross, what's your opinion of average selling price? I can't do that in a very short clip. It takes a few minutes for people to have enough time to be able to understand when I say, well, this month, first-time buyers were entering the market. So the share of sales this month was higher with first-time buyers. Well, obviously, if the share of sales, the percentage of sales that took place were going to first-time buyers, that puts downward pressure on the average selling price that month. And that EKG, the Canadian Real Estate Association, has used for the last 40 years to keep the consumer in the dark, is a result of that shifting sales mix. I know how to measure the sales mix. To go on a television interview or the BNN or the CBC, or for someone to send out a camera crew, which these places have done several times with me over the years, for a short 30-second snippet, and then that allows the proponents or the people that want to argue against my viewpoint an opportunity to look at that little tiny snippet and debate it. Hopefully your listeners understand. I am basically speaking against an entire infrastructure. Banks, realtors, government bodies, economists. These people all believe the world is flat when I'm saying the world is round. So it's almost impossible for me, Jim, to go and do a short interview with someone and explain why what I'm saying is correct. Where on this show, I have enough time to express some concepts, and it also allows me to some time so that I don't reveal too much. Because I hope your listeners understand. I state that we have the ability to time the housing market. Everyone else will tell you that we can't do this. We give a money-back guarantee on our metrics and our platform that if we can't time the market, if our forecasts are not correct at any time, you get your money back. The reason we can offer that guarantee is because it is impossible for us to be wrong. Housing markets are linear. Housing markets change, as I've said in the show, years in advance. What you're reading today is something that already took place a year or 2 years ago. And it's just now coming, the conclusion of those decisions is only now being told to everyone else. So when someone wants to interview me, it's I'm very, very, very careful. I get offered a podcast all the time. Now, that said, Jim, I've also accepted an invitation down to Appraiser Fest in San Antonio, Texas. Because with appraisers in the United States, I can speak to them and they will give me a long enough time at this conference to be able to explain how housing markets function to real estate appraisers. So if your listeners, again, they could go to Appraiser Fest in San Antonio, Texas, and they'll see that I'm a guest speaker there. I'm not going to do that in Canada. That is not going to happen in Canada. Because in the United States, the appraisers pay for our intelligence down there. Because the appraisers can be consultants in the United States, unlike Canada. They can give consumers advice. They are fully open to everything we discuss. When we're telling them about our metrics, our failure rate, our trading rate, why average selling price is actually average purchase price, they have no reason not to sit down and listen and make a rational decision. But in Canada, that's not the case. Appraisers in Canada are members of the Canadian Real Estate Association. The only way that an appraiser in Canada can do their job is by being the member of a local real estate board to get access to the sales data. The moment they join those real estate boards, they agree to the code of ethics with the realtors. They agree with the MLS rules and regulations. So that means they have never been afforded an opportunity to look out and comment on it. So that's why that's why you don't see me in the news all the time. That's why I'm not out there. I am there willingly debunking these reports. If someone asks me for what talking points or what data points I use to debunk them, no problem. But I am not going to hand over what is apparently the only place, as absurd and crazy as this sounds, we apparently are the only people who can time the market. Well, if those American appraisers decide that they want to listen to the full story, not just when I'm going down there to speak for, they too may be able to tell their clients in the United States how to time the market. But I am not going to tell people how to do that today. They can go spend 30 years studying a housing market. They can have generations of their family study the housing market. And then, at the last minute, your sales career, you can end it. This is what I hope your listeners in the show understand. I quit selling homes, Jim. I was a realtor for 25 years. We were the number one sales team in Canada with RE/MAX for 7 consecutive years. If there is a new technology available in the real estate industry, odds are my family instituted it first in Canada. We were the first ones to have a real estate website. I was the first real estate broker in Canada to carry a laptop to his clients. We were the first ones to have modems. We were the first ones to put cell phones in all of our cars. We were the first ones to have a licensed assistant. We were actually called the RE/MAX team, and the owner of RE/MAX, Dave Linegar, requested that we would stop using the name because other realtors in Canada couldn't brand themselves because we were called the RE/MAX team. We were recognized coast to coast. Why would I quit that career? Why would I turn my back on that kind of money? The reason is quite simple. You can go to the Huffington Post, Google Rothke, Huffington Post, and you will see where I have an article, a series of articles, there's 3 there, 2 blog posts and an article, where I expose the Canadian Real Estate Association for multiple counting single sales in the province of Ontario. The chief economist of the Canadian Real Estate Association, Greg Klump, tried to debunk me in those articles. He failed because I have the data. The reason why I have more data than everyone else in Canada is we have a team of over 250 real estate sales reps across Canada who I have known, many for decades, who ship me their information. In turn, they get information back. They get valuable information about Canadian real estate that they can use. It has been a long, ongoing process to build that network up. I can do nothing to cause me to lose the trust of those people. Another thing your listeners should understand is in the province of Ontario, if you want to follow the rules 100% as a realtor, if you never want to lie to a customer, if you want to not break a rule, it means that all of the information and knowledge that I had studying the housing market for 25 years, I personally could not use for my own gain. I could not take the information that I have available on timing the market and go ahead and do it. I couldn't buy properties and flip them. The reason why I couldn't do that is if I wanted to remain compliant, if I wanted to remain ethical, if I wanted to my customers, clients, always to be able to trust me was, if I wanted to buy a property, I am required by law in Ontario to tell the owner of that property if I believe I'm going to make money on it. I could not just go out and buy a property knowing I could make 15 to 20% on that property in a year and flip it without disclosing that to the owner of the home. Now, what owner in their right mind is going to have a real estate agent come in there, offer them a low price on their property, because obviously I know how to negotiate low prices, and at the same time, tell the people, oh, by the way, I'm going to make 20% on this property in the next year. It just doesn't make any common sense. The only way you can do that in the province of Ontario is to give up your real estate license. Now, I know there are thousands of real estate agents who don't do that. There are thousands of real estate agents who look for the loopholes and they try to lowball an offer on a property and then flip it. I know that they're out there. What I'm saying is that is against the law. I had a family reputation of 40 years of never, ever doing anything wrong to a consumer. I was not willing to continue that. So now we have the wealthy homeowner.
We'll have more with Ross K. By the way, one of the reasons Ross likes being here, we ask one question, and I would say on average it takes you 15 minutes to fully answer that question, and we don't interrupt you because we're not looking for 10-second clips, because I worked in headline radio news where you needed 3 10-second clips to do 3 stories, which was your quota. There's no way you could explain the stuff that you explain on this show in just 10 seconds. We'll have more with Ross K., and I'm sure he'll take more than 10 seconds to answer our next question right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross K. Ross, a listener, was asking for advice on whether they should wait and keep saving so they could have a 20% down payment on a property, or should they go ahead and buy right now with just 5% down?
So that's sort of like the double whammy question, Jim. So the first thing I would say is that you shouldn't be buying right now in almost every single real estate market in Canada. Most real estate markets in the United States, I would tell you shouldn't be buying either. You should only be buying, as I had said earlier in the show, following those 2 rules. The housing market, as a first-time buyer, what you're not told is that you have so much lead time in terms of price change that you're not going to make a mistake. So I am telling you right now that in most markets, you shouldn't be buying anyways. You should be waiting. That said, you need to find out what market you're buying in, and you need to be sure that you're going to get the buy signal when the buy signal is needed. The mistake most home buyers make, Jim, is they sell it when the market is busy, they buy when the market is busy and they sell when it's slow. Just the opposite to what they were doing. Because when you buy, even under those terms, busy versus slow it depends on the category of home that you're buying. I think the listeners could understand that if I was to say, if a whole bunch of first-time buyers go out and buy 1 month, that means the owners of those homes are going to rush out to buy the following month. Well, obviously, that creates a continual imbalance in the inventory. In other words, the buyers naturally put pressure on themselves because they move in mass in a housing market. This is why when we hear the other reports, the other surveys, what's the best month of the year to buy in? Well, it depends on. There is no such thing as a best month. The answer is there's probably 2 months, could be 4 to 6 months apart from one another for each category of buyers. it's a myth to tell people the best time in the market is to buy in December, because for first-time buyers, that is not true. Trade-up buyers in some markets in Canada, in some years, December may be a good time to buy. But over the last 37 years, you could not give a blanket statement like that. So the first-time buyer, in terms of timing, that is a different question than down payment. And my down payment question is a black and white answer. This is a rare black and white response based on looking at 40 years or 37 years of homeowners interacting with their homes. You really should be buying with the lowest down payment the government will allow you to get in at. If the government will let you buy a home with 5% down and you've got to pay CMHC insurance to buy it at 5% down, it is financially beneficial to you to do that. It's financially beneficial for you to do that when interest rates are below 9.83%. So I hope your listeners are listening. I am quoting a 9.83% 5-year interest rate. We know what they are today. You're on below 4% for a 5-year interest rate 5-year term interest rate right now. I'm saying as long as the interest rates are below 9.83%, you want to be purchasing with the minimal down payment possible. I also want to tell your listeners this little tip. The same advice that I'm giving to this first-time buyer, I would give to every homeowner in Canada. Every financial advisor in Canada has drilled into our heads, has spoken over and over again, has proven that you should diversify your investments. You should not hold too much of your net worth in one asset. We believe the exact same thing with the family home. The worst mistake that people make when interest rates are below 9.83% is they pay off their mortgages. They burn their mortgages. That is the worst advice ever given. That advice is rooted in 1980s and 1990s homeownership, when the 5-year mortgage rate was above 6%. Most financial advisors don't know that 9.83% is one of those magic numbers in real estate. So they always used the 6% for years. What you should never do, is you should never have more than 40% of your home paid off. Now, I'm not saying that you shouldn't have access to that money. I'm not saying that you should be using that money with a cavalier attitude. What I'm saying is, from a strictly financial standpoint, looking at thousands of homeowners who have owned homes for decade after decade after decade, knowing how homeownership math works, you should be diversifying your home equity the same as you would be diversifying your stock portfolio. Prior to the wealthy homeowner being created, Jim, the consumer never had an independent source out there who would give them an opinion of value of their home and a price forecast on their home. We forecast price 4, 8, and 12-month basis. So every homeowner in Canada can and should be able to access what their home is going to be worth 4 months, 8 months, and 12 months from now. Those forecasts are easily done with a high degree of accuracy. So accurate that no one can ever make a mistake if they're using our metrics. In other words, if you're using our forecasts, you're never wrong. That gives you an opportunity to have no risk. Because in the past, Jim, what has stopped people from not burning their mortgage, or what has forced them to burn their mortgage, is fear. Fear that their house price is going to drop in value at the same time their debt outstanding is high. And we tell people there's no need to worry about that. As long as you have your money is liquid in some form, in other words, you can access it in 2 or 3 months, or you split it up into packages so that it's coming back in every 2 or 3 months over a year. In other words, you use a staggered GIC investment strategy. You never have to worry. You are never going to be hung out to dry. You have 40% equity in your home. There's no risk. What you're doing by that is you're replicating the advice I just gave to the first-time home buyer. The homeowner who gets the highest rate of return on their investment is a first-time home buyer. Always will be, in perpetuity. That will never change. A high ratio CMHC insured mortgage for the last 40 years has returned a higher rate of return for the owner of the home than any other investment asset class in Canada, period. There is nothing that even comes close. We have, over the last couple of years, Jim, this is what I hope your listeners take away from today. You give $1,000 to your bank for your mortgage payment in a month. Your house has turned around and given you $2,000 back that exact same month. You have your $1,000 is fully refunded, plus they give you another $1,000 back in 1 month. This happens every month. There is no other investment like real estate that you live in. That doesn't mean that you don't have to approach it responsibly. It doesn't mean that you don't have to talk to a lawyer. You don't have to talk to an accountant. You don't have to talk to a financial advisor. Because we tell you, you have to talk to all those people. Because that's how you don't ever have to worry about your financial life. Pretty much everything you hear about home ownership and the housing market is nonsense. Home ownership is the best investment you will ever make. There is nothing that even comes close. Housing markets are fully predictable, fully timable. I don't care what anybody says. It is nonsense to say otherwise. I do not earn commission any longer. I no longer have to make recommendations for people to sell their house so that I make an income. I do not have to tell someone, you should buy this home today because I'm going to get a fat $30,000 commission check. Those days are over for me. I turned in my real estate license. What I can do now is I can tell a bunch of people, oh, don't buy a house right now. Wait. We have people in Vancouver right now. We have high net worth clients in Vancouver right now who are members of the wealthy homeowner who are over $700,000 richer because we told them not to buy a house in the spring of 2016 when everything was going crazy in Vancouver. The reason we could give that advice and we didn't have to worry, we guaranteed that the housing prices were going to drop, was because when everyone else thought the housing prices were hitting those 30% year-over-year gains, we knew housing prices were already dropping. They were reporting something that took place months before. And that's what this first-time buyer needs to understand. Get the right advice. Sit down, look at a spreadsheet. Go talk to your lawyer. Go talk to your accountant. Go talk to your financial advisor. Go talk to your mom and your dad. Talk to everybody. Take this information with you. Sit it down in front of them and ask them to find a flaw in the system. The only reason we can say, Jim, to do that is there are no flaws in the system. There are no flaws. Homeownership wealth is the easiest wealth to make, and it's no risk. So that's what that first-time buyer should be focused on.
Ross, thank you so much for the update.
Hey, thanks for having me on. Let me go on for long-winded there, Jim.
That's what we do. My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or the show, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.